Okay. So coming to the next question, this is more on technology. Artificial intelligence. Now, recently you made a comment that China and US are spending a lot of money and India is not. But one thing we saw last year was there was a lot of mistrust and doubt regarding this technology in the industries. They're not sure about how these things have to be taken. Now, let me come to the second aspect of the cryptocurrency. Bitcoin almost touched 20,000.
Let me answer the first question first. You see, artificial intelligence is a result of an enormous amount of data availability and huge computing facility at very low cost.
Right.
Once you have data available, you have computing facility available, you can write algorithms to find patterns in the data.
Right.
And by using those patterns, you can train machines to deep learning or machine learning to recognize through pixels at your photographs certain objects because they've been taught, they've been trained for a period of time with a great degree of certainty and come to conclusions.
Right.
Now, a machine can work 24/7. It does not ask you for a salary raise. It can crunch enormous amount of data, unlimited amount of data. It's got unlimited computing power. So, machines are now taking over much of the work human beings did, which are all rule-based. Now, let's say surgery, okay? We're going to have a talk with people on robotic surgery. Let's say diagnosis. A doctor makes a diagnosis of a cancer oncology patient based upon certain observations,
right.
okay? Certain symptoms and observations. Now, if all the data about all the symptoms and observations of 100,000 patients is put into a computer and the patterns are recognized, then the certainty of the diagnosis expands.
Yeah.
Now, through IBM Watson, with 50,000 cases, we're able to do that. So AI is an advancement, is going to be prolific, is going to be across all industries,
right.
and is going to play a great role in decision making. And we're going to see more and more rule-based jobs being taken over machines.
Right.
So we are in the age of disruption, where machines are going to have intelligence.
Right.
Intelligence not in the way human beings have intelligence, cognitive intelligence, where we can be lateral thinkers, where we can mix all kind of data and come to a conclusion, but more for pattern recognition
right.
and for rule-based work.
Right. So you still think that the AI won't be so empathetic like humans in the coming years?
I don't know whether you can train machines to have emotions. Maybe it will come over a period of time, because emotions also are patterns.
Right.
You know, you can have emotions based on patterns, you can have based on data.
Right.
But I think it'll happen. Now, you spoke about cryptocurrency.
Yes.
Cryptocurrency came into being because a set of people felt that the value of money is getting eroded because of excess supply. Now, if you look at the theory of money,
right.
money has value because it's a medium of exchange, is a store of value, and the unit of accounting.
Right.
As a medium of exchange, goods and services can be exchanged using money as a common denominator.
Right.
Right? It is all denominated in rupees or dollars or whatever
right.
it is. And as a store of value, you can have savings in rupees which can be used to buy.
Right.
As a unit of accounting, you can account for wealth accumulation or savings accumulation because
right.
it is a unit of accounting.
Right.
Now, the challenge with that is money can get debased because sovereigns,
right.
that is states,
yeah.
can print currency
okay.
and debase. So we have inflation.
Right.
Inflation is too much money chasing too few goods. The world earlier tried to link the creation of money to the gold because gold was scarce. So scarcity value of money is coming down, especially after quantitative easing, QE,
okay.
because about $14 trillion of reserves have been created by central banks the last 7 years after the financial crisis.
Right.
And the world is surplus with money and interest rates have come down. Right. So people got together and said, let us create a virtual money
right.
And do it by a process where it becomes difficult to create more and more of it,
right.
and we'll only create 20 million units, which is the Bitcoin.
Right.
And as you go create more and more, it requires enormous amount of energy to do, which is called mining.
Mining, yeah.
So some 17 million have already been done,
right,
if I'm right.
Right.
And now people started accepting a Bitcoin in exchange for certain goods and services in the real world. But what happened was, the bitcoins being scarce suddenly took a fancy as an asset class for investment,
exactly.
and it's gone up in value.
Agreed.
So you can't have a currency appreciating in that manner,
right.
and becoming a unit of investment itself.
Right.
So we're seeing a world where bitcoins and ICOs are coming through, where people are trying to use this as a substitute for money,
right.
which is ultimately exchangeable to money. We're seeing the rise of a new asset class.
Right.
And we ought to see what happens. I'm not very sure that it's going to be accepted as currency because the sovereigns
right.
are not going to give that power.
So that's like you have been with SEBI for quite long, and you have worked with the policymakers as well. Recently, I heard they had sent notices to investors who have put money in Bitcoin. So how does this banking and the financial system get disrupted?
I don't think it's a very simple matter. You bought a Bitcoin at $1,000, you sold at $10,000, you got to pay tax.
Right.
So it's very simple.
Right.
It's an asset class, it's not a currency.
Right.
Why is it not a currency? Because the power to decide what is currency resides in the government, and the government has not declared it legal tender.
Right.
So once the government declares to be legal tender, it becomes currency. So it's not a currency. So what is it? It's an asset class. And if you sit in India as a resident and you trade, you make a profit, you have to pay tax.
Okay.
So I think it's perfectly legitimate.
So it's not a, like, what people are calling it as a, what do you call, scam?
No, it's not a scam. It's an asset class. I buy a Bitcoin in the exchange, I sell it for a higher value, I make money, and that profit is exchanged in currency,
Right.
and is in my bank account. I made a profit, I got to pay tax. To me, it's very simple. But except they should do it in a much more civilized manner.
Right.
You know, in the sense that they must get intelligence and they must ask people and tell them that, look, it's an asset class, please pay tax, either as business income or capital gains. And since it is a capital asset, you got to pay capital gains.
Right.
And please pay up your tax, educate people, and it's fine.
Right. Okay, now coming to one of the favorite subjects, startups. Okay, so you have already funded some good startups like Zoomcar.
No, we have funded 250 startups across 10 funds.
Yeah.
And as a family, we have invested in 31 funds. So we created an ecosystem.
So this is through Aryan Capitals, or this is through?
No, add in capital 10 funds, but as a family, we invested in 31 funds,
Okay.
many other funds, because we created a system.
Right.
We get 2,500 companies coming and
Wow.
meeting us every year across all these funds, asking
Wow.
for investment.
Right.
So we've played a small role in the startup ecosystem and also in policy.
Right.
We worked with iSpirit to write the policy for India.
Okay.
We wrote the first policy for Karnataka, for
Right.
Rajasthan. For Goa, we writing the policy. We helped West Bengal. I don't know whether they're going to do it. So we have created the intellectual background for the startup ecosystem to develop in this country. And let me give some data before you give me further questions. India has 32,000 startups.
Yeah.
And all the names of startups are in the portal called Your Story. And $95 billion of value have been created.
Right.
About 400,000 people are employed.
Right.
And by 2025, we believe India will have 100,000 startups.
Right.
Will create jobs for 32 lakh people and will create $500 billion of value.
Right.
So enormous amount of development is happening. Bangalore dominates with about 35%. Delhi is number 2. Then comes Mumbai. And between the 3 cities, about 80% of startups are there.
Right. So recently I read an interesting thing about corporate consolidation and something called startup mafia, where the big companies basically start acquiring smaller companies. And if you remember, Vinod Khosla almost bought Google at one point of time. So how do you think that a lot of big companies like Flipkart, they started owning small startups? Is it going to affect any kind of a value creation from the startup community?
I think big companies should buy small companies and release capital.
Right.
And the track record of big companies in buying small companies is bad all around the world. 70-80% of acquisitions don't make sense. They just blow up money. It's fine. And they stop innovation. Innovation happens in small companies.
For the past 10 years, we've seen a lot of startups coming up, but very few startups actually were sustainable.
Yeah, because I believe out of 100 startups,
Right.
about 60 will fail, which is a very decent rate.
Right.
About 10 will be zombies, will continue to live without, will just continue. There's 70%.
Right.
10 will have a decent business. There's
Right.
80.
Right.
10 will really do well, go up 5x, 6x and do well.
Right.
And 10% has the chance of really making it big.
Right.
And of 10% making it big, 5% makes it big, it's fine.
Right.
But in certain areas, because they're growing faster than the market and one market share, they require enormous amount of capital. In e-commerce, for instance, their strategy seems to be to give more discounts,
Right.
to have greater e-commerce, which I don't agree with, but
Agreed.
that's